Hello, guys. Welcome back to our platform where you get the best Forex education for free, absolutely free. We dish out, Forex education at its best for free without having to charge you anything. And we give out values. So if you are coming across this channel for the first time, kindly click the follow button, turn on the notification bell, like our videos so that when we drop subsequent values like this, you'll be the first to get it. So let's get right into today's topic, which is going to be market structure masterclass, stroke order flow. That's what we are going to be talking about today. So what is market structure? Market structure is simply price action pattern in a market or price action behavior in the market. When the market is said to be bullish, there is what we expect to be seen in order to determine whether a market is bullish or whether a market is bearish. There are characteristics you want to be seen in the market to determine whether this is a bullish market, this is a bearish market. And, I'll be showing you how the banks, how the big institutions, how they look at the market. That's what I'm going to be revealing in this video, how they look at the market. That's what I'll be bringing to bear. So let's get right into it. Let me bring out my poly line, which I love to use a lot. So in a scenario when we have a bullish market, what we want to be seeing is price creating high, creating low, creating high, creating low, creating, let's say, a higher high, higher low, and, higher high. Let me put this one aside. Let me put it aside. Let me put it aside. So on your higher time frame or on the particular time frame where you determine your overall trend, depending on the kind of trader you are. If you're a swing trader, probably you are looking at your overall trend on the weekly time frame or on the daily time frame or on the monthly time frame, as the case may be. But for me, I am a day trader. I used to tell you guys I'm a day trader. So I look at my overall trend on sometimes on daily, sometimes on 4 hours to determine my overall trend. Then my immediate trend, I look at it on 15 minutes, then execute my trade on 1 minute or 3 minutes time frame. So this is my higher time frame. When you're talking about order flow or external market structure, we are talking about the external swing of the market, external swing. And when you are talking about the external swing, these are the external swing points, external swing points, external swing point, external swing point, external swing point, external swing point, and external swing point in the market, external swing point. So if the market is bullish, we expect to be seeing price creating, series of higher highs, higher lows, higher highs, higher lows, higher highs, higher lows in the market. But within the external swing points, we have internal structures. If the market is going up, you have internal structure, internal structure, internal structure. Then you have your change of character. You have something like this. Market is coming. That's your internal structure. Then at the point where you have your change of character again, price begins to go up. Price begins to go up. At the point where you have your break of structure, you expect price to come down. Price to come down. And like that, you keep on having scenarios like this. So, looking at the external swing point, the order flow in this market, the order flow, that's the direction where the bank's algorithm is being triggered, bullish, uptrend. But right in between the uptrend, you have a series of uptrend taking place there. And at the same time, you have a downtrend. And this is where traders get carried away. This is where they get carried away in the market. This is where they lose it in the market. By the time you have this uptrend, yeah, the overall market is on an uptrend, but you have this uptrend. By the time you have this downtrend taking place here, and this is where traders, this is where they lose it. They would have forgotten that this market is bullish, that the downtrend, because when you go to your lower time frame and you start seeing lower highs, lower low, lower highs, lower low, you tend to believe the fact that, okay, the market is on a downward trend, not knowing that it's just a pullback of what it take of the play on your higher time frame. It's just a pullback of what is happening on the higher time frame. So by the time you have your break of structure, it's a kind of realignment with the bullish structure. When you have your realignment with the bullish structure, then since you already know your overall trend is bullish, then when you have your change of character here, then you know it's a real alignment of what is happening on the higher time frame. But you know, traders, by the time they see this price creating lower highs, lower low, then maybe for instance, here, here they want to take the trade and take a shot. The price will eventually come down and take them out because the market is bullish. So for the fact that you are trading on lower time frame doesn't mean you should lose the touch of what is going on the higher time frame, so that you're not going to be caught unaware in the market. And we get most of our trade setup, we get it from the internal structure. So in a bullish market structure, it is possible for you to get a sell opportunity, for you to see a buy opportunity. And if you followed us on our Telegram channel, that is where you begin to see something like, oh, this setup is a buy to sell setup, because I've seen it that, okay, we are on a bullish trend, but this lower time frame bearish setup is just for me to sell into possibly a bullish PO high that is around there. So I know that I'm selling, but the market is on a bullish trend. So if it gets to this place and I have my break of change of character, I know it's a realignment with the higher time frame structure. I know it's a realignment with the higher time frame structure. And let me clean this out. Let me take it out. Let me take all this one out. Let me take it out. And the same thing applies when it comes to a bearish structure. A bearish structure, we consider the external swing point. The external swing point to determine we use the external swing points to determine the flow of the market. The flow of the market, the external swing point. That's how we get to understand where the bank have intention of taking the market to. The external swing point. That is how we get to understand where the bank's algorithm is being triggered towards. So if you're on a downward trend, you can have opportunity to buy using the internal structure. Then when you have your change of character, you know it's a realignment with the overall flow of the market. So it is possible for you to have opportunity to sell, buy and sell in what's it called? In a bearish market. You can have opportunity on both sides. In a bearish market, in a bullish market, you can have opportunity to sell, but you must know where the market is at every point in time, so that you must know the phase, whether it's a pullback, whether it's a realignment of the market, and so on and so forth. You must understand that. So let me take you to the real chart and quickly show this to you on the real chart. Let me show this to you on the real chart. Okay, this GBP USD. When we are talking about the external swing points of the market, external swing points, Let me bring out my tool to show you the external swing point. Okay, look at this market. Let's start from here. This is the external swing point. This is the external swing point. External swing point. These are the external swing points. So looking at this market, this is a bearish market flow, right? From this place to this place, the order flow is bearish. The market structure is bearish. The external structure is bearish. But if you look at it within the external structure, we have internal structure. You can see the price is going up here. Then we have an uptrend, we have a downtrend. But that doesn't remove the fact that this market is a bearish structure, at least at this point. But at the same time, right in between the bearish structure, we have both buying and selling opportunity. And let me show you something here. Look at where we have a change of character. We have a change of character. What did you see? Price keep on going up. Then by the time you have your change of character and you know the market is bearish, you have your change of character, you have your change of character here, and you know this market is bearish. You know this market is bearish. By the time price return to mitigate your supply zone here, to mitigate your supply zone right here, you know, is a realignment with the order flow of the market. So, you know, if you are taking this kind of trade, you can actually, it has actually realigned with what the higher time frame is, the bearish bias you have on your higher time frame. And so if you are taking this kind of trade, you can take it and hold it for long because you know you are in the flow of the market. You are in the direction which the big institutions, which the big institutions algorithm is being triggered towards. But at the same time, look at here, we have a change of character. By the time you have your, change of character, price return to mitigate your demand zone after your change of character, then this kind of a trade, you shouldn't sleep on it for too long because the algorithm of the market is bearish. So you just take your short buy into a premium area, because if you look at 50% of this leg, let me bring out my fib. 50% of this leg, you see, this is the 50% of this leg. So price will always return to a premium zone. That's at least any price above 50% to continue the order flow. And look at what has happened. Price returned to 50% of this leg, mitigate this area, and this is smart money reversal. That's a video for another time. And price continued. And price continued the journey down. So let me okay, look at I like this example. I like this example, man. I like this example. So we have from this swing guy to this swing low. What did you see here? Price is going down, creating lower high, lower low, lower high. Price created this low. Price created this low, right? Created this low. But look at the point where you have your change of character. We have a change of character right here. You have a change of character. Price return to mitigate this area. And the market is still bearish, but we have opportunity to buy in the market using internal structure. But you should bear in mind that price only wants to come back and mitigate or return back to a premium area. Because price, if you follow me on our Telegram channel, I talk about discount and premium a lot. Price will only always return to premium to continue the move. Or in the case of a buy, you always return to discount to continue the move. And if you want to learn more about discount zone and premium zone, I have a video on supply and demand on this Telegram channel, on this YouTube channel. Do well to watch it after this one so that you can have more understanding of what a premium and a discount zone is. So if I bring up my fib, let me bring up my Fibonacci. You are going to understand that, see, I'm putting my Fibonacci on this from the swing high to the swing low. And if you bring it out, you realize that price returned to premium. I said any price above 50%. And price returned to premium. And what did you see? After price got to this place, a change of character and price let me remove it. Let me remove the fib. A change of character, you have a change of character here, and price continues to go down. Price continues to go down. And this is supply range. These are supply range. For those that doesn't understand what the supply, if you're not a smart money concept trader, you don't know what the supply range is. So this is your supply range. Price tap into my supply range and in a premium zone. And what did you see? A change of character and price continued to go down. And if you're taking this kind of a trade, the first target is going to be this area. This low is going to be the first target because this is a low that couldn't produce higher high. This low refuses to break this high. So this low becomes an institutional liquidity because it is now a weak low in the market because this low refuses to break this high. So by the time you have the change of character, for those that wants to swing, this is a daily time frame. Just imagine you take your trade all the way. This is going to be your first target. Look at it. And let me check how many number of pips this is actually going to be. Assuming you take your trade from here, oh, this is over 2,000 pips. So if you're a swing trader, you can use smart money concept to swing. You can use it to day trade. You can use it to scalp the market as the case may be. So just imagine, like I said, it's going to be a weak low because this is the low that couldn't produce higher high. So look at the price. It took days. Even I think this is even going to be weeks for price to eventually reach there. But you can see it's a target. It's a target. Price actually smashed that area. Price smashed that area. So let me move to another pair. Let me move to gold. I don't want this video to be too long. I don't want it to be too long. Let me move to gold. There's a particular area I want to show you on gold. Let me show you. Where is it? Where is it? There's a particular, something very interesting I saw on gold. Oh, okay. Okay. I can't find it again, but let me make do with what I have here. Okay, this is gold. Let me make do with what I have here. Let me begin my analysis from here. So this 4 hours time frame, this external swing points, external swing points. Then you have your low here. You have so you begin to have your external swing points. These are your external swing points. Then price created another swing point. So let me make use of this one for you to see. You can see that gold is bearish, but in between the bearish move, these are just internal structures, internal structure within the structure. So you need your to understand order flow, you need your external structures. You can do this on 1 minute time frame. You can do this on any time frame. But it depends on the kind of trader you are. Like I told you, I'm a day trader. I do short swing. So for me, 4 hours daily time frame is what I use for my external swing point. Then I begin to look for my opportunities to trade within the internal structures. So just look at from here to this place, from here to this place, price created, this is a break of structure here. This is a break of external structure here. Let me put my, just for you to see, break of my external structure and price gold put a new low. So I told you price will always return to premium. Price won't just be selling directly and just be going down. Price will go and return to premium. And what did you see? These are above 50%. These are above 50% of this leg. Above 50% of this leg. You use your fib, see, above 50% of this leg. So price will always return to premium. So what I do is I mark up, in the case of a sell, I mark up all the PO highs I have in my premium zone, and I wait for reaction on any of it. I mark up all the PO highs. When I have a PO high, I mark it up and I wait for reaction. So look at the price is going, you have your change of character here. Price continues to go into premium. Then when you get to this place, look at what I told you. This low couldn't produce higher high. So it becomes an institutional liquidity. So if you take your trade all the way from here, you target here, it becomes a weak low in the market. And what this is, price smashed it. So price will create a low. If it refuses to create higher high, that means this is a protected eye. This is a protected eye. This is a protected eye. That means the banks are protecting the highs and reaching out for the lows. So this becomes a sell side liquidity, it becomes a weak low in the market. And you look at the way price smashed it. Look at the way it got smashed. Look at the way it got smashed. So like I told you, I don't want this video to be too long. And maybe I'll be making subsequent videos on market structure and be showing you the application to the market as the case may be. I just want you to understand what an external swing structure and an internal structure represent the order flow of the market and where the bank have intention of taking the market to, where they have intention of taking the market to. Thanks for always returning to our channel to watch videos like this and to learn Forex just for free. We appreciate you out there. So in case you are coming across this channel for the first time, do click the follow button, click the like button, and make sure you turn on the notification bell so that when we drop subsequent videos like this, you'll be the first to see it. So I'll be signing out at this point in time. Thank you and God bless.